and welcome to Money Matters. This year marks the 25th anniversary of Hong Kong's handover to China. The financial industry is one of the pillars of the Hong Kong economy. Reporter Alice Khan looks back at the changes that have made the local stock market one of the world's top fundraising centers.
Midnight, July 1st, 1997. The British flag was lowered. Then, a 12-second pause occurred between the British and Chinese anthems at midnight. The flags of China and the Hong Kong SAR were raised, marking Hong Kong's return to China. However, a storm was brewing amid the celebrations.
During the financial crisis, we saw many Asian currencies plunge drastically within a short period of time. I remember the Thai baht devalued by 50% within a short period of time. That encouraged international speculators to attack the Hong Kong dollar to try to devalue the Hong Kong dollar.
The Asian financial crisis rampaged across the region. Thailand and Indonesia were hit hard. Speculators then targeted Hong Kong. They aimed to break the city's linked exchange rate with the US dollar, with massive short selling of the Hong Kong dollar.
In order to deter such manipulation, I have exercised my power under the Exchange Fund Ordinance and asked the Hong Kong Monetary Authority to draw upon the resources of the Exchange Fund to mount appropriate counter-activities in the stock and futures markets.
In an unprecedented move, the government used public funds to buy stocks and futures contracts. During a 2-week operation, the government spent $118 billion, or about 18% of the exchange fund, to buy 33 constituent stocks of the HSI. The government successfully fended off the speculators. When victory was announced, the big question was, what would the government do with all the shares in its possession?
Our responsibility is to handle these stocks in an orderly manner.
To minimize the impact on the market, the government repackaged the shares into an ETF and called it the Tracker Fund of Hong Kong. Designed to follow the HSI, it became the first ETF listed on the stock market in November 1999. The Asian financial crisis not only led to the birth of the Tracker Fund, it also brought about the setup of Hong Kong Exchanges and Clearing.
After the handover, Hong Kong and other Asian countries were badly hit by the financial crisis. At that time, we felt we need to strengthen our risk management. So the government decided to unify the Stock Exchange of Hong Kong, the Futures Exchange, and the Hong Kong Securities Clearing Company as a single holding company for easier management. Then there would not be a problem of miscommunication.
The three institutions merged into a single holding company, Hong Kong Exchanges and Clearing, in March 2000. It listed in June 2000. The IPO price was $3.88 a share. Now it trades at nearly $400. Also, a new generation of electronic trading system was implemented on the exchange in 2000. In 2003, the government abolished the 16-year-old minimum brokerage commission rate to increase the competitiveness of Hong Kong's securities market.
Because the SAR government wanted to create free and fair competition in the market, all the minimum brokerage commission or minimum charges were anti-competitive. All kinds of businesses were facing the issue, not only the securities industry.
Brokers vented their anger and took to the streets. As the stock market was sluggish after the handover, stockbroker income suffered. But the lower stock transaction fee stimulated trading activities. On top of that, many mainland companies went public in Hong Kong, expanding the HSI and attracting investors.
1992年嘅時候呢，香港聯交所呢就
In 1992, the stock market at the central government explored the possibility of allowing state-owned enterprises to list in Hong Kong.
喺1993年7月
Then a year later, the first state-owned enterprise successfully listed in Hong Kong as an H share.
成功喺香港上市。咁啊
Hong Kong had become the platform for Chinese companies to raise capital.
2 months before the handover, a company called Beijing Enterprises listed in Hong Kong. It drew tremendous interest with retail investors and broke several records, including being the largest IPO with the highest oversubscription level, reflecting the euphoria for so-called red chip stocks at the time. The red chip craze cooled off during the Asian financial crisis. Starting from 2000, state-owned enterprises, including oil companies PetroChina and Sinopec, went public in Hong Kong. China Construction Bank listed in Hong Kong in 2005, and 1 year later, it became a blue chip, the first state-owned enterprise to be included on the HSI. Since then, many large state-owned banks have listed in Hong Kong.
This is not just the milestone for the ICBC. It also marks a reform of China's banking industry and the success of opening up China's banks to the outside world.
ICBC was the first Chinese company to list both in Hong Kong and Shanghai on the same day, raising $140 billion in its IPO, the largest listing in the world at the time.
As H-share trading strengthened, Hang Seng indexes put more H-shares into the HSI. In 2006, it expanded the number of constituents on the index to 38 companies. The move allowed eligible H-share companies to become blue chip stocks. There are now 69 blue chips. More than half of them are Chinese stocks, including red chips, H-shares, and China concept stocks, representing about 80% of the capitalization of the HSI, compared to 10% back in 1997.
好明顯睇到咧，如果冇內地企業嚟香港上市咧，香港就
Apparently, without the listing of China's enterprises, Hong Kong couldn't have attained a status of an international financial center. The central government's reforms and opening up policies are far-sighted. Allowing the state-owned enterprise to raise capital in an international market and subject to other jurisdictions' regulation. This is a wise decision.
In a bid to attract more mainland companies, in 2018, HKX reformed its listing rules, allowing IPOs of new economy companies with weighted voting rights. It also allowed pre-revenue biotech companies and secondary listings of overseas listed mainland companies.
At this moment, I am so excited.
Xiaomi was the first stock listed with a weighted voting rights structure. Ascletis Pharma was the first pre-profit biotech company listed in Hong Kong in August the same year. The e-commerce platforms Meituan and Alibaba followed suit. The Alibaba listing in 2019 drew tremendous interest.
We are ready, Hong Kong. We are coming.
Alibaba's secondary listing in Hong Kong raised $100 billion, the third largest offering in Hong Kong's history. With more mainland companies listing in the city, Hong Kong's IPO market was ranked at the top of the world in 7 of the last 13 years.
Conditions are being actively created to establish a trading mechanism between the Shanghai and Hong Kong stock markets.
Li Keqiang's remark at the Boao Forum brought about an influx of mainland capital into Hong Kong.
For China, the Shanghai-Hong Kong Stock Connect is a great milestone in opening up the capital and financial markets between mainland and Hong Kong.
3, 2, 1. Shenzhen Hong Kong Stock Connect has begun.
With the Stock Connect, mainland investors can invest in specified Hong Kong shares via stockbrokers in China, while Hong Kong investors can trade mainland stocks through local Hong Kong stock brokerages. Since the handover, total market capitalization rose from $3,200 billion in 1997 to over $37.7 trillion now. The Hang Seng Index, meanwhile, saw an over 40% rise since 1997. Hong Kong became the world's largest fundraising hub. But Hong Kong faces headwinds such as the pandemic and geopolitical problems. How should Hong Kong position itself in future?
I think we have to further improve our framework, provide better protection for investors, and improve market regulation. Then, investors will have confidence in our market and we can attract more capital into the city. Hong Kong has a competitive edge, attracting plenty of capital.
Despite the ongoing pandemic, Hong Kong fiscal reserves remain strong at an estimated $910 billion. How did Hong Kong accumulate such wealth? We look at the city's economic expansion next.
Coming up on Money Matters, how Hong Kong managed to increase its wealth despite multiple financial crises. Stay with us. Welcome back to Money Matters. Hong Kong has survived major financial crises, yet managed to accumulate huge amounts of money in its exchange fund and in its fiscal reserves. Reporter Alice Khan looks at how the city has become richer and what challenges it faces as it comes out of the pandemic.
The Hong Kong economy remained sluggish in the aftermath of the Asian financial crisis. In 1998, the SAR saw its first recession in 13 years.
We experienced the unprecedented financial crisis, so the consequences were unavoidable. I need more time to work out my next budget.
In the financial year of 1998 to 1999, Hong Kong recorded a fiscal deficit of more than $23 billion. By 2002, the deficit soared to over $60 billion.
Hong Kong issued bonds when I was Secretary for Financial Services and the Treasury. It was the first time Hong Kong issued bonds in 30-something years. Bonds worth $2 billion US. In 2003, the deficit reached $60 billion. At that time, the government's fiscal reserve stood at $200 billion only. So it was very risky because if the deficits persisted, Hong Kong's ratings would be affected.
In 2004, the government launched a $6 billion toll revenue bond and established the Hong Kong Link to acquire the toll revenue bond from the government. In 2004, the Hong Kong Link issued a total of $20 billion worth of retail bonds and institutional notes. The bonds helped the development of Hong Kong's bond market. Now, the city is a leading bond hub in Asia, ranking third in terms of issuance in Asia ex-Japan after mainland China and Korea. Apart from that, the government also securitized and privatized some assets to improve its financial situation.
Listing the MTR on the exchange today establishes a good precedent. It paves the way for other possible government privatizations in the future.
Whether they're tenants, the public visiting the malls, or investors, this is a win-win situation.
The government received more than $60 billion in funds from the listing of its assets. But the government couldn't keep selling assets for revenue. In the aftermath of SARS, the central government announced a series of policies to boost Hong Kong's economy.
This arrangement is a big gift.
In 2003, Beijing launched SIPA, or the Mainland and Hong Kong Closer Economic Partnership Arrangement, bringing new business opportunities to Hong Kong, China, and global markets. In 2003, only 5,000 overseas companies had set up their regional headquarters or regional offices in Hong Kong. As of last year, the number exceeded 9,000, an increase of 67%.
We have good news today. Starting from January the 1st, the individual visit scheme will cover 6 cities in Guangdong province.
In July 2003, Beijing allowed travelers from the mainland to visit Hong Kong and Macau on an individual basis. The policy brought a huge boost to the local tourist and retail industry.
I will buy stuff I like. When I see something I want to buy, then I will buy.
Now they're very friendly. Their attitude has changed. In general, they became very enthusiastic and warm suddenly.
In 2003, the total number of visitors was 15.5 million. By 2018, the number rose to as high as 65 million. In 2003, mainland visitors accounted for 55% and increased to 60% by 2010. In 2018, the percentage of mainland tourists increased to 78%.
The individual visitor scheme and SIPA were implemented after SARS with the support of the central government. The Hong Kong economy recovered quickly after 2003. Our retail industry was very robust because of the individual visitor scheme. SIPA was a channel for Hong Kong enterprises entering the China market. After signing SIPA, many overseas companies used Hong Kong as a springboard to enter China. Because of these two policies, the Hong Kong economy recovered rapidly after SARS.
Today's grand opening marks the beginning of a new chapter for tourism in Hong Kong, a chapter in which Hong Kong will develop as a premium family destination in Asia.
Hong Kong Disneyland took 6 years to build. It opened in September 2005 to cater to mainland tourists. Apart from the massive economic impact derived from the individual visitor policy, many Chinese companies also made investments in Hong Kong. Mainland companies acquired several local banks and also bought local stock brokerage firms and travel agencies. In 1997, direct investment in Hong Kong totaled $1,300 billion. China accounted for 19%, while the biggest amount of investment came from the UK at 25%. In 2020, mainland investment rose to 27.1%, while the UK fell to 9.5%.
The global economy is knowledge-based. Innovation and technology add value to productivity and importance to competitiveness.
In 1998, Hong Kong's first chief executive, Tung Chee-hwa, announced a blueprint for innovation and technology development, including a $5 billion innovation and technology fund to promote applied sciences and the establishment of the Science Park, Cyberport, and 5 R&D centers.
If we had attracted successful mainland tech companies such as Alibaba and Tencent to set up business in Hong Kong, we could have become an innovation hub. But we didn't at that time. Now we lost our competitive edge. They don't want us now.
Hong Kong has improved its record since then. Currently, the Science Park houses more than 1,100 technology companies. Over 500 are startups. And there are over 1,600 startup companies and other tech firms at the cyberport. Hong Kong has relied heavily on the financial and tourism industries for economic development. Frederick Ma hopes the government can do more to diversify its industries and grasp the opportunities in the Greater Bay Area.
香港呢，就太過側重於喺金融。
Hong Kong relies too much on the financial and tourist industries, so this is not good. If we can develop other industries, then our economy will be diversified. That is the direction for the next 25 years. Now there are no political opponents, then the government can fully manifest its work. In the past, it didn't fully manifest its effort. Hopefully, things will become better in the future.
The ebb and flow of the last 25 years has presented both challenges and fortunes for Hong Kong. The next quarter century will likely be no different.
That's the show. Thanks for watching. Next time on Money Matters, a look at some of the companies working to ease the burden of the pandemic and making money at the same time. See you then. Good night.